Joseph Hogue with the Let's Talk Money channel here on YouTube. Thank you for being here. I want to welcome you to another one of these quick take videos where I'm answering your questions on some of the biggest questions you have over the virus, the market, how stocks are doing, and when you can jump back in to get those highest returns. Two very important lessons today, topics today. Looks like the Senate is going to pass a trillion plus stimulus plan. Already had another package last week that was passed. A lot of money going into this market and a lot of potential for future returns. But I see a lot of investors jumping in every day, asking every day if stocks have bottomed and if they should buy this or that stock. And I think there's a lesson here to put this in perspective with the 2008 bailouts and some of the historical perspectives to where you can make sure you're getting in at the right time and don't have further down to go. So what we're going to cover today is how the bailout is going to affect investors, okay? What companies are going to receive bailouts, how that affects their stocks, and when to buy in. We're also going to talk about those stimulus checks that are going out. I also want to invite you to join our private Facebook group, Let's Talk Money Together. So I'll leave a link to that in the video description below, or just go to Facebook and search for Let's Talk Money Together. It's a private group. We've got some great conversations going all about stocks, making money, investing your money, and making it work for you. So look for that on Facebook and join the group. Now I want to get started on those bailouts and how the bailouts are going to affect stocks, because I see a lot of investors talking about trying to figure out who's going to get a bailout and should they invest in their stocks, and really wanting to be early into that idea. People want to invest before the bailout is announced, so so that they can benefit from that initial pop on that. But if we look at other examples, if we look at the 2008 example of that bailout, the TARP and the TALF program, then it might not necessarily be the case that you want to jump in before that bailout program was announced. So the TARP bailout program was created in October of 2008 to buy preferred shares in 8 banks, AIG, and then the big 3 automakers. Okay, they also created that TALF program for guaranteed loans that banks would make to these companies and the government would back. And what I want to do, I want to look at some charts for the banks, stocks, as well as an automaker to kind of see how this played out for shareholders. So if we first look at a chart of 2 bank stocks, okay, this is Citigroup in green and Bank of America in red, all right? And I've marked here where October 14th, 2008, when the TARP and the TALF programs were announced and invested in those 8 banks, AIG, and the big 3 automakers. And you can see this, the share price continued to go down all the way through March or into March of 2009. So not necessarily a huge pop on that announcement or even on the investment into those companies. Now you can see you do see a pretty quick rebound after March 2009 for the next several months, almost into 2010, and then kind of flattened out a little bit after that. And I think you're going to see the same thing when we look at Ford. So here's a chart of Ford's shares from that same point from October 2008 all the way through 2015 here. And you can see that, okay, so the market bottomed in March 9th, 2009. Ford took a government loan in June 23rd, 2009. Okay, it actually didn't get any TARP funds, those bailout funds, but it did take advantage of some of those low interest and government guaranteed loans there in 2009. And it had already started rebounding before that with the rest of the market. Okay, and then in June 2009, the Cash for Clunkers program was announced. And this is what really helped to boost shares of the automakers, was that Cash for Clunkers. It got people trading in their old cars, buying new cars, buying other cars. So that really boosted the shares of the automakers. But you can see, even this government loan that they took earlier in June, it did help boost the shares. That Cash for Clunkers helped boost the shares, but it was still rising for upwards of about 2 years after that. So now it wasn't like so you had to invest on that bailout announcement or that decision. As we saw with the banks, shares continued to fall, and even with Ford, where it was a little bit closer towards the point where they got that loan, that the shares were rebounding. It wasn't necessarily just because of the loan, and you still had several months to invest. And we're going to get to why that's a very important idea here in a little bit, I want to talk about what we're looking at with the bailout this time. Okay, so right now with the Senate plans and most of the talk out of the administration, it looks like the bailout now is going to be mostly in the form of loans. Okay, so low interest rate, government-backed loans to these companies, which are actually better for current investors because of that preferred share dilution. Now they're also talking about some kind of an equity stake. So maybe the government will also give some money to these companies for a preferred share stake, which again would dilute current investors and kind of hold down those returns. But right now it looks like it's mostly going to be in loans, which is actually great for investors, right? Because loan or interest rates are at historic lows right now. So these companies would basically be getting extremely low rate loans to help keep them afloat through this crisis. The problem with that is that one, it wasn't like companies couldn't get loans before anyway. With the interest rates as low as they are, and with the economic growth that we were seeing, companies were loading up on debt anyway, using it to buy back shares, using it to fund dividends, and getting that cash wasn't necessarily a problem. So not sure quite as much how much better this is going to be with all that new money and government-backed loans is going to be. Also, though, you got to look further down the road. So these companies are going to be even more indebted than they already were. That's going to mean interest payments. That's going to mean debt leverage and that kind of thing. But really the point here is, and we have a saying on Wall Street, that being early is just as bad as being wrong. Okay, you can know the next crisis coming, but if you're investing in it, if you're shorting the market a year or two early, then you're still wrong. Okay, you're still going to be losing money for that 2 years. By the same token, you can think, okay, this bailout money is coming, shares are going to be rising, the stock market is going to do better. But if you're 2 or 3 or 4 months early, you're still going to lose money. Okay, you're still going to be wrong. I do not want you to call a bottom here. You don't have to call a bottom on this. Okay, you don't have to be investing before the bailouts to get the majority of those gains. As we saw in those bank stocks, as we saw in Ford, you could have invested, even after the bailout was announced, and still taken a part in the majority of those gains, even in Ford, where it had already started rising at that point. So I would be much more worried about being early here than a little late. Now we see the market today is rising on that stimulus plan, and I think a lot of investors are going to be jumping into the market thinking the worst is over, and it might not necessarily be the case. Okay, we've got a historic unemployment number coming Thursday. All right, unemployment claims, first-time unemployment claims are reported every Thursday. Right. And this is just the people that file for those first week unemployments, and it's estimated that it could be as high as 2.25 million people file for unemployment this week. Okay, that would be a record number, most anyone has ever seen in 1 week, and these unemployment offices are being inundated and flooded with new people. So I think the sentiment is going to be hit on that number. We're going to start seeing the unemployment rate rise. We've got the March jobs report coming here in about a week. That's going to be that first Friday of April, and I think that's going to be a historic number, historically bad number. So I'm not sure that the market has seen the worst of it yet. So I would rather you be a little bit late, maybe miss out on a 5% rebound, a 10% rebound even in the shares, but still be able to save your money back, be able to invest when the time is right, and enjoy the majority of the gains, rather than jump right in right now with all your cash, see the market fall another 10 or 15 or 20%, and have those immediate losses. Okay. So there might be a quick pop on the stimulus plans, on the bailout announcements, but we could have further to go. Just be smart, be patient, leg in slowly to your investments. So if you do want to invest now, if you think the worst is over, then maybe put 25% of your cash into the stock market. Buy back into a lot of these beaten down stocks. But maybe you hold back 30% of your cash available, or 60% of your cash available, and start every few weeks or every month put a little bit more in. Okay, I'm actually waiting until probably about mid-April at the earliest, because we're seeing 10,000 cases plus reported new cases of the virus reported in the U.S. every day now, and I think we're still going to have some of that shock there. So just really quickly, who might get bailout loans in this package? The airlines are definitely getting some kind of a bailout. The administration has already said that. They've already said they're going to backstop the airlines. And really, they've been hit extremely hard. And it's going to take a long time. It's going to take much longer than a lot of these other industries for the airlines to rebound, I think. They were already very much indebted. And those travel restrictions are still going to be in place, even as some of the other restrictions maybe come off. The president, he's itching to loosen these restrictions on going out, eating, that kind of thing. But the travel restrictions, as far as airlines, are still going to be in place for quite a while. So the airlines will definitely get a bailout. You're looking at Delta, you're looking at United Air, you're looking at American Airlines. Boeing is likely also going to get a bailout. They are extremely important to the economy, not only for the airlines, but for the steel and other industrial parts sector. But they employ a lot of people, and it's basically one of only two global aircraft manufacturers. Okay, you've got Boeing and you got Airbus, which is a European company. So I guarantee you the U.S. government does not want to see Boeing fail. So Boeing will likely get a bailout, but it might be on more restrictive terms on these. So they won't be able to buy back stock for a certain period. They won't be able to do maybe they won't be able to pay a dividend for a while. But they'll definitely be getting some money. The cruise lines have been really the hardest hit here. But while I think the cruise lines will get some money, especially if they help supply ships for kind of like hospital ships kind of use, but it's harder to justify bailout money to a cruise line, right? This isn't necessarily an essential part of the economy. Same with the hotels, same with the restaurants, same with a lot of these other industries. They've been hard hit by the virus, but they're not necessarily essential parts of the economy, right? If the whole hotel industry had to restructure, file bankruptcy, it wouldn't necessarily destroy the economy like the airlines were. Hotels are also politically poisonous, considering that the president himself might benefit from that if he handed out a bailout to the hotel industry. Restaurants likely to get something, although the vast majority of restaurants are small, privately owned, one-person restaurant or one-person companies, that kind of thing. So it's a little bit harder to apply bailout money to when the industry is completely fragmented like that. But again, I think you don't need to call the news on this and invest early. Okay, that's the point here is that you can wait this out, maybe leg into your investments with 30% of your cash now and wait another month to invest the other 30 or 60% just to see how things develop and if we really have reached a bottom. Now I want to cover those stimulus checks because everybody's talking about these checks. How much are we going to get? How much are you going to get? And when it might get here. So the rough proposal right now is for $1,200 per adult, making less than $75,000 annually. Okay, so I've talked to a lot of people, and a lot of them are saying, well, I'm probably not getting anything anyway. So how's this going to affect me? Even if you don't get a check, obviously all that money going out immediately, it's probably the quickest way to get money into consumers' hands to start spending it again. What the idea is, up to $75,000 now, minus $5 for every $100 you make over $75,000. Okay, up until $99,000. By the time which you get nothing, and that would be $198,000 for couples. Okay, so I'm probably not getting anything. A lot of the people I've talked to probably aren't getting a whole lot. But you will get that. The families are getting $500 per kid. So I've heard a lot of a lot of estimates. So for up to maybe 2, 3, 4,000 per family. Now what to do with it though? Okay, this isn't a lot of money, especially if you're looking at losing your job or having to file for unemployment. Unemployment is on average about half of what you usually make. So even if you're making $2,000 or $3,000 a month, if you're on unemployment, you're already down $1,500 a month. Okay, so this stimulus check, this $1,200 per adult and $500 per kid, isn't going to take you very far. So I want you to put that money aside, pay bills with it, stay healthy, use it to be able to stay at home and not go out in this and make things worse. But what I've also been saying, what we've been talking about on the channel is if you don't have that immediate need to pay bills with it, use it to make more money by launching a side hustle or some kind of an online business. Okay, not only is this going to give you that income insurance, so you can create a website on less than $5 a month, right? You can start doing videos for YouTube or a lot of these other online business ideas. You can start them very cheaply, and they're going to start cash flowing. Okay, it's not going to be immediate, but you're going to have that income insurance for the next time a crisis like this hits, or if this keeps going into into several months, then you're going to have that income coming in and be able to pay the bills. But it's also going to give you a another outlet. This thing could become a whole business for you, a full-time business that you enjoy doing, and you can make a lot of money doing this. Okay, so there it is, the bailout money. Who's going to get it? The stimulus checks. Who's going to get it? How much? Again, I want to invite you to join the private Facebook group that's called Let's Talk Money Together on Facebook. There, we've got some great conversations. Ask your questions in the comments below. I'm doing these informal videos every Tuesday and Thursday, and then the regular videos Monday, Wednesday, and Friday. So stay safe, stay calm, and I'll see you here on the next video.